and everything's in sync right here. 5 minute is crossed, 15 minute, 30 minute, 1 hour, 4 hour. And if you take a trade here, your stop would be about 8 pips, 8 pip stop. So I said we take a trade right here.
And the trade is on the 1 minute. Just to make sure you guys know. He's taking the trade on the 1 minute.
Okay. Now we're gonna illustrate. I'm trying to illustrate it both on the 5 minute and this is where our stop is. Stop is on the 5 minute,
Yeah.
somewhere around here.
Right.
Right, and this will be our
You're gonna mark a take
green.
profit.
No, that's the green entry,
Entry.
which is right here. Okay. All right, let's see how the market plays out. All right. Okay, so we're up about 7 pips.
And your 15 has gone below zero to come and sing, giving you an entry there too. So
Okay,
you're in
yeah,
the
now
5-minute chart.
yeah, correct. Now we're in a strong zone, pretty much. If you know, form a terminology that people understand, everything's below the zero line. 15 and the 5. 30 minute is close to it. So you know we pretty much in a good, you know, possibly a good decent trend.
And it doesn't matter that the bar is still blue, right?
Well, that's why I said the trade is on the 1 minute.
Okay.
Correct.
Following
Trade is
it
on the 1 minute. All right, so
there you go.
at
See
this
the
point,
bars change colors on the 5 minute?
Right.
That's the confirmation that the 1 hour is coming into sync, is giving you downward momentum. They may fluctuate back and forth if the price goes up and down, okay? But you took your entry on the 1 minute and you're still good on that. So Deborah, when you asked about, you know, bars flipping back and forth, you have to keep your eye on the lower time frame to see if your setup is still correct.
Okay.
Okay, and I think Santiago just moved the stop loss to break even because he was up 15 pips. That's key.
correct.
You need to protect your account. So if you're up 15 pips, there should be no reason that you're losing money on a trade.
You made 25 pips on the way up,
Right.
right?
Yeah.
25 to 30, and you're up another 17 pips right now. No, actually, you're up 18 pips. So 30 and 18,
43.
To, yeah, 43 pips. You know, at that time you make a decision. You know, you continue with the trade or get out. You're done for the day. You know, regardless of what the market is doing. But if you come over here and look at the 1 hour, you see that the market has a 2 ball, and now we're looking for the 2 ball here for transition.
Either a 2 ball or
the
those
down.
3 balls going to get taken out.
Taken out to continue the trend to the downside. So that's what you got to take consideration. Once you see the 2 ball here and everything starts to change, then you know that this might not get taken out, and the trend is probably changing back to the upside.
Correct. But in the meantime,
you always have to.
At that time, you're probably up 50, 60 pips, you know, so.
Correct. You have to always keep your options open of what the market might do. So you want to mentally stay ahead of the game, not be blindsided when something happens. So you have to keep your always options open. It's either going to come down, make a 2 ball, and turn around, and I'll be prepared for that, or the market's going to continue to go down, break this ball, and get a new X or new 3 ball to continue the trend with a D2. So as long as you keep yourself open to the possibility of what might happen, you adjust as the market changes. Just like here, we knew the market was up, but it has changed. So you have to keep the mind open that the market can change at any time. You're looking for a high today. So after you get the high today, the market's going to change for that day, transition back to trying to go low again. So you have to keep your mind open to both possibilities.
So you didn't go short until you saw on the 5-minute chart, the 15-minute color change, because the 30, the 1 hour and the 4 hour already had a color change.
No, you took the trade on the 1 minute when
Right.
everything changed.
Right.
Okay,
But
so
everything
you
was
didn't
the
wait for the 5 minute to get in sync. The 1 minute gave you the trade, and then the 15-minute confirmed it.
okay.
I mean, the 5 minute confirmed it with the 15 turning over. That makes sense.
Mhm.
Okay. So you can always start your trade on the 1 minute because that's going to give you your fastest entry and the smallest stop loss,
Mhm.
right? But you keep your eye on the 5 and the 1 just to see if they're following the 1 minute. Because if the 5 doesn't ever support the 1 minute, you're going to have a very short trade on the 1 minute. Okay. Now in this case, the 5 minute bars change from blue to red back to blue. What does that tell you?
Transition.
Yeah. It's the 1 hour is still not set. You can see the 1 hour is still blue. But the 5 minute change in between that blue bar or the 1 hour bar to a red, where it was trying to, push it down. Now you have come to a decision point. You have a 3 ball on the 1 minute, you have a 2 ball on the 5 minute, but you have nothing to tell you on the 1 hour that it's going to go back up, right? It's still 2 ball transition. You're up another 15, 18 pips, whatever. So you're up in total 43 pips. Do you want to sit through the 3 ball retracement on the 1 minute? Or you want to just get another setup to go short? These are the decisions you have to make as you're trading, right?
Right.
I would get out because the transition happened back to blue, from red to blue on the 5 minute. That means my 1 hour is also, momentum is not decided. And my 1 minute has a 3 ball. Oh, I'm out. I'll just wait for a 3 ball on the 1 and try and get back into it.
I got a quick question. Would you recommend playing the 5 minute trades and not playing the 1 minute? I figured the 1 minute would be more advanced when you really got the system down packed. But as far as looking at you're more safer, I guess, if you're looking at the colors and looking at everything setting up, play the 5 minute until you get everything down
Sure.
packed to play the 1 minute. Because
Sure.
I think that was never really said, because I know you guys play. I'm not comfortable with the 1 minute, to be honest with you, because most of the time when I take trades on the 1 minute, I'm too late.
Right.
But I figured you guys know the system, so y'all know when to pull the trigger on the 1 minute. And just so now that you're getting in, you can take advantage of the big pip moves. But I would say, me personally, until you get the system down packed, don't play the 1 minute if you don't know what you're looking at.
Okay,
Because
so the
you're gonna get
rules,
in late.
the rules I set out in the chat do a 1 hour and 5 minute or 15 minute and 1 minute combination. Okay, so in this particular trade, there is no setup between 1 hour and 5 minutes. You don't have the 15 minute up, but sure, the 15 minute gave you a trade on the 1 minute. I mean, it gave you the bars, transition bars to go on the 1 minute, because H4 is red. The problem with the 15 is that the higher time frame on the 15 is the H12. Okay, and the H12 is still blue. So you don't. The rules that I put in the chat, the H4, H1 and 5 minute and 15 and 1 did not give you a trade. You were out of this pair. Okay, so the H12 is still blue.
You see? Everything is still blue.
H12
We're
is
starting to
blue,
get a,
right? So
yeah. So the only things that are in sync are the 4 hour 1 hour at this point, 4 hour 1 hour and 30 minutes.
which is
So
strictly a
that's
5-minute trade to a 1-minute trade. That's a scalping trade.
correct.
If you're following the rules I set out, then you're not taking this trade at all. Okay, maybe the long trade because it was in sync, but
Well,
not the short
I'm
trade.
looking at, well, I do see that I do play the Asian session. And I take into consideration that you guys said that the 4 hour, when it transitions, that's the low of the day. So that's why I made the comment about when, if you're looking at your 5 minute at the beginning of the day, you get a 3 ball at the bottom, you get a push up and a pullback. That's your trade setup for the 4 hour. So actually, when you took the trade in the London session, that's a continuation. The
Yes,
actual trade
Correct.
setup, it to
yes,
satisfy your rules, the
yes,
actual trade setup was begin in the Asian session. So now you're just taking a continuation in the
yes,
London session.
yes, but it still satisfies the H1 and H1 and M5 combination, because the H4 was blue, which is the lowest time frame on the 5-minute, and everything's set up to blue when you're going long. That's why I'm saying I would have taken the long trade, but I wouldn't have taken the short trade because the short trade was in conflict.
But I think that if we're gonna just look at the overall market for those beginning, if we understood that the fact that the 4 hour transition, if we're looking at the 5 minute, it satisfied the rules as far as the peak low, which is the low of the day, and it started, early. I guess that's before like early Asian or like
Yes,
right at, okay. So
yes, it
now we
does.
know that the first push up, pull back.
Right.
Now anything after that is a continuation. Now it's a strong possibility that this market could turn around if we're looking at the higher time frame, that it could transition and start turning over to go down because the big picture is down.
Yes,
I,
I'm not
that's what,
disputing that. I'm just saying that you're right.
no, it's not about you disputing. It's just that that's the thing that I think that confuse a lot of traders as far as market structure, still keeping the market structure part in your mind and not just focusing on the colors. Where we actually begin that and look at where the market is moving to the point where we still have to understand the actual move started early. So now we're catching a continuation. So now it could possibly be over as far as looking at where the market could be setting up to go to a different place. I think the forward thinking part is the confusing part as far as for most traders. Look at the main setup started early. You caught most of the move. Now it could be doing a different setup, and we possibly have to sit on our hands and wait for another big possible setup, which where the market could be going into a transition period or whatever. So, I mean, I think if we just keep that in mind as far as we see that the market turned over on the 4 hour, you got a low of the day, a push up and a pullback and a continuation. Now we might have to sit back and wait because we do have a change in color on the 4 hour, and the overall big move is to the downside.
Correct.
Yes, you're
Correct.
right.
That's yeah. You are correct. This we started off in the London session, but we established that this is where it all started because this is where all the transitioning happened. But if you're coming into the London session and this already happened, you have to be aware that okay, this is where it happened. Am I getting on a setup in the London session to have a continuation, which we got earlier? But the only way to catch that 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 trend, as we saw we was going through all the colors changing and all the stuff. That's what we're looking at as far as having the transition coming in to do that continuation play, right? And that's where the 1 minute came in place, where you can take your continuation trade and how to do that, and how using the 5 minute and the 1 minute combination can help you take those trades when you're not completely sure, everything is not completely aligned yet, but you know the market is still trying to find a high of the day, right? So you still have to be open to the fact that you found the low of the day, and now you're attempting to find the high of the day, which could be in the London session, right? Where everything is transitioning to go short. Everything is red. The 4 hour, 1 hour, 30 minute, and the 15 minute is pulling back. So now since you are a potential high today, now and everything is transitioning short, you're only looking for a short setup, unless the 4 hour gets back in sync to go long again, right? That means that 4 hour is going to be broken. You have to take that, that's that forward thinking that this could continue go down, or the 4 hour could saddle and start giving you a setup to go long again. Well, at this point, the setup is short. And in order to get a short setup, this has to pull back, the 15 minute has to pull back, and everything got to get in sync again to go short. But you always have to open to the fact that the market can change, and it could continue on an upward movement based on the H12. But the H12 and H4 are not in sync right now. So one or the other is going to happen. This one's going to get in sync with the 4 hour, or the 4 hour is going to get back in sync with the 12. So having that mindset, you have possible high today. Is the market going to turn around? It will tell you, because everything will start shifting and continue to go short. Is it going to go up, continue to go up? The market will shift from a low, from going short, start shifting to going long again. You understand? No?
Yeah, I got you. Thank you.
Hello? Yeah. So the reason we have the 1 minute is to help assist with the inconsistency, right? And show where the market is turning and how you can use the 1 minute at that point when you know the market is turning and everything is not quite lined up. You go down to your 1 minute, it'll be clearer because you're in a position that is tradable. The 1 minute becomes confusing when you're in a position that is not tradable. When you get to a position where the market is actually turning around and it's tradable, the 1 minute gets in sync and it looks like any other chart. And that's one of the reasons the 1 minute was so confusing for me before, because I was trying to trade it in a non-tradable condition. But when you are in a tradable condition, then you'll see it look like, oh man, it's this 1 minute look like any other chart. Pull back, continue, everything is in sync. And that's the whole thing, is trying to get everything in sync so it can make the trading easier. So we have the 5 minutes. Sometimes if you're off the 5 minute, you may not get a trade, even though it may move in that direction. That's when using the 1 minute will allow you to catch those trades. So that's why I put it here, so you can see the difference and have people gain some confidence and maybe start playing around with it. Because the only way you're going to get used to it is being able to play around with it and see when you do get a trade on the 5 minute, how it looks on the 1 minute and how you could take advantage of some of these trades. I mean, you don't have to trade over the 1 minute, but keep it there so you can see how, get used to it, see how it transitions, how you can get into trades when the 1 minute, the 5 minute is not quite ready there. But the market is moving that direction, everything is set, you're just waiting for everything to line up.
So where would you take a possible reentry or an add-on here? If you're short on the 1 minute, are you short on the 1 minute?
Yeah, we're still short on the 1 minute.
Okay. So maybe you can point out if there's an add-on on the 1 minute.
Yeah, once the 15-minute gets back in sync, then we
Okay.
should have a add-on to go
Okay.
short. Well, keep in mind this is the 5-minute. This ball can be taken out, or it could just continue to retrace, and then give us a short. All right. So at this point, everything is lined up. We're just waiting for the 15-minute to get back in sync to take another entry.
Okay.
Yeah, everything's out of sync. 4 hour, 1 hour, 1 hour, 4 hour telling you something different. 30-minute, 15-minute telling you something different. So if you wasn't out of that trade before, anticipating, that pullback, you definitely need to start trying to get out and see if you get another entry short, just to protect your profits. Okay. So where we at? Okay. This is where you have to make that decision. I'm putting in an add-on. Everything's in sync again, right? So everything's in sync on your 5-minute. Everything is already in sync on your 1 minute. Remember, we're trading off the 5-minute, but the 1 minute didn't really get in sync to around the same time. So the 1 minute probably would not help you out in this case. They both got in sync around the same time.
So if you were trading the 1 minute and you got a 3 ball, you would still wait on the 5-minute to change colors. Is that right?
Correct.
Okay.
Correct. Once everything got in sync on the 5-minute, and you go over to your 1 minute, it should be tradable. Now the 1 minute probably gave you an entry earlier, but that wasn't with everything in sync. That was just the lower time frame, the 1 minute and the 5-minute being in sync.
Okay.
But we want the highest probability. We want everything in sync. But we still got a good entry, even off the 5-minute with a 7-pip stop. And if you're still in that trade earlier, now you have 2 positions.
So would you be nervous that there's a 3 ball right there? That's what happens to me.
Like right now.
Uh-huh.
Okay, this is the problem with the don't get too hung up with the balls. Is one of the issues we were having before. We put too much emphasis, too much on the balls when the balls are not static. They move when the market moves. So in order to alleviate that, yeah, as long as you have momentum in that direction, I won't pay attention to this ball until everything changes in the opposite direction.
Okay.
Right. So we saw this up here, but we really didn't take action until we saw everything shifting and starting to move down to go short. This is just pretty much a heads up that we may be at a topping point, but it's not a guaranteed topping point. So don't put too much, just give yourself a heads up to start looking at your indicators to see if they're going to shift or not. If they don't shift, then that ball is going to be taken out.
Okay.
Put a vertical
Just-
line on that 3 ball at the top on the 5 minute, please.
This one right here.
Yeah, vertical line, not horizontal.
Oh, sorry.
Okay, so what do you see at the bottom there, Deborah?
All blue.
Hold on, let me
Okay,
make this.
so would you be taking a short here on the 3 ball?
No.
Okay. When would you be considering taking a short?
When everything was in sync on the 5
No, no.
minute,
No,
Right.
considering taking the short, not taking the short.
oh,
You consider taking a short when the H4 turns red. So can you move that vertical line to the right where the H4 turned red? Okay. What do you see now?
okay, mostly in sync. The 15 is not in sync.
So can you move the line again to where the 15 turns red? What do you
Okay,
see?
Okay, everything is in sync now,
No,
even though
no,
the
no.
bars,
Everything at the bottom is at sync, but the
Right.
top is still blue.
right.
So that's not an entry.
Oh, okay.
Now, if you move the line further to the right where it turns syncs up again, there's your entry.
Right there. Okay.
So
Okay. So
the
this,
balls
this,
are
this is
just
where
the balls are just
Go ahead.
being used as a guideline for a trend. You still have to sync up your indicators, to get your actual entry. Now, what Len or Duff was saying was, don't look at the 1 minute. I would have been looking at the 1 minute at the when you got the 3 ball at the top to see if everything got in sync on the 1 minute. Okay, because it's telling me that the momentum is shifting to the downside, but I'm trying to get an early entry. This is what he's saying. If you're not experienced and not comfortable, don't do it. Okay.
Uh-huh.
But as you can see, what Santiago was saying, that you miss out on about 15 or 20 pips of trade if you're looking at the 5 minute sync. And what I walked you through, by not taking a trade, you missed out on 15 pips to the downside. As you get more comfortable with the system, and I agree with Len on this, is that you shouldn't be using the 1. You should use the H1 and the H5, H1 and the M5 combination to take your entries. But you still get a lot of pips, even though you missed the top 15. This is where regret comes in for a trader, right?
Right.
I missed 15 pips, how much longer is it going to go?
Right.
Well, your 1 hour bar has turned red on the 1 hour chart. Your 15 minute is in sync, your 4 hour is red. You follow the 4 hour till it turns blue, you still get your pips on the 5 minute chart. This is what I advocated in the rules I set out.
Okay, so you would wait for the 5 minute chart, the
On the
4
5 minute
hour
chart, the H4 to turn red
or
after I
blue.
take my entry. Yeah.
Right.
Right.
Okay.
Oh, turn blue, sorry.
Okay.
Dang. Yeah, turn blue.
Okay.
And that gives me the longest trend following. And at that point, I'm not paying attention to the chart itself. I'm looking at the H4, whether it's going to be turning blue. Okay, because that's
Okay.
when I know where my trend is. After that, the chart is not existent to me.
Where
Okay.
can we find the printed rules?
It's in the chat.
Okay.
Just scroll
okay.
up, Mark.
So this is where the 1 minute kicked in, right?
Yeah.
This is where this is what the 1 minute kicked in. And this is the first where we initiated, and this is the second move down, which was
It was the
this
15
right
pips or
here,
18 pips, right?
and yeah, and then where was it? Those are the two locations.
Right.
Right. So when you do find that the 5 minute is tradable, right?
So you're looking, you know your direction on the 5 minute with the H4 turn,
Either for the
but your
duration. Then it's easy.
but your 5 minute is not set up. Then you can go
Yeah.
down to the 1 minute to get a set up.
Yeah,
That was the,
then
that's
you
the
can
only
see that the 1
difference. Go ahead, sorry.
Correct. When the 5 minute is set, when the 5 minute is set up, that means it's tradable. You can go down to your 1 minute and you see how smooth it is. This is that move down. This is that pullback we were waiting on the 5 minute. You're not trading there because it's not set up to go long. You're waiting for another setup to go short. So once you get into that location, look how smooth the 1 minute is. You got your entry, and or you pretty much just waiting for everything to line up to take in that direction because you already have the setup on the 5, and you already said you was going to get in on the 5 anyway, right? So at that point, the 1 minute and the 5 gave you the same entry. You know, you didn't get the same entry here on the 5 and the 1 minute, but you know that the 5 minute was set up. You were just waiting for a entry. That's when the 1 minute comes in, and you can see how smooth it was. And compared to, you know, this move, trying to go up. And then you get another entry here on the 1 minute for that move we just took. So the 1 minute we're concentrating more is easier to just concentrate on the 3 balls. Those are going to be your major turnaround points that are going to line up. That are going to line up with these swings that we're waiting for add on the 5 minute. You don't want to trade a 2 ball or a 1 ball on the 1 minute. It's strictly off the topping of the X, the 3 ball. That's when you're going to get your entries when you combine it with the 5 minute. Everything else is going to be garbage. In between, it's going to just be messy. So
Problem I have on the 1 minute is that 3 ball changes position. You know, it moves.
Correct.
And it.
Yeah, if the 3 ball is changing position, that means the 5 minute 1 ball or 2 ball are changing position too. So that means the market is not set yet. Everything is not in sync yet.
Yeah, but
it won't change if everything is in sync.
The point is that if the ball changes position, your indicators at the bottom are not in sync anyway.
Okay.
And if you wait for the sync after the 3 ball appears, there's very little chance that's when I won't say it'll never go up, but of course, market makers will do whatever they want to do. Your stop loss should be like 5 to 10 pips, you know, so that's an acceptable risk at that point. Okay. Makes sense?
Yeah,
Yes.
and it sounds pretty simple to program for a scanner too. That's a really wonderful sequence to look for, Raj. Simple, clear.
That's why Raphael's here.
Right. I'm here.
And everybody just forward thinking. If you're looking at the 5 minute, we have to start identifying that we are starting to get back in the structure as far as the Asian session.
Correct.
So we not,
Correct.
that's the thing. I don't want everybody to get caught, because I do this myself. I get caught up with the colors, but we still have to understand market structure. So we are trading back into the Asian session. So we might want to try to be a little leery about, looking at that. It's just a heads up for everybody to be
Correct.
start thinking, have that forward thinking mentality. You are trading into structure.
Right on.
Yeah.
Correct. This you're back in this structure right here. You're at the end of the London session.
Right.
At this point, you shouldn't even try to be trade. You already got 43 pips up and almost 43 pips back down. That's London session is pretty much done. Whatever the market wants to do after that, you have to wait for the New York session for the next entry for the next.
And the
If the market wants to continue
oscillators,
down, that's
Sorry.
are changing. Yeah, you see the change
The
in color right
oscillators are
back into,
showing
like
profit
Dov said.
taking.
Correct. And you're back at a structure, which is the Asian high, right back at London low. So you should be considering getting out of this trade, right? And you're done with the London session. Now you should be waiting for the next setup in the New York session. Regardless if you get a nice trade up here, I'm done, because I'm not gonna push the issue trying to catch every little pip when I already got the high of the low of the London and the high of the London. It could trade in between here. It could break it. It could come back and break that. But I know I will get another trade in the New York session. So this is the part where you don't overtrade. You take what the market gives you, and now you at a structure where the market could do anything. The market start manipulating up and down movements, and you just don't want to take that chance.
And psychology wise, you know, you're better to trade from ahead than from behind. You're less desperate when you're doing that. So just a thought, you know. I don't think I'm saying anything different for most people, but the quicker you get ahead, the better off you are.
Hi, I'm Kostas. I have a question.
Go ahead.
All the signals for the entries or the exits are from closed candles. Or it
Correct.
doesn't matter. It doesn't matter. You want the candle, even if the candle is 1 hour, 4 hour, or daily, to be closed. Correct?
Correct.
Correct.
Okay. In order to avoid wrong signals.
Yeah, the wrong
Correct,
sync.
that's right.
Yes, wrong color sync. Yes.
Okay. Thank you.
So this is where, you know, you're at the end of the London session. You take your profit regardless if the market's going to continue down or not. You know, you was getting conflicting signals, but the 1 hour and 4 hour, you know, got back in sync, right? 30-minute got back in sync, 15 minutes get out of sync again, but it got in sync temporarily, right? This is where, you know, you tie in your stop, right? And then if the market wants to go, it goes. If it comes back and take you out, you're done for the day. Or just go ahead and take your profit when it hits this area right here of confusion. You're at the end of the London session, or at least the London trading block that we have. So those decisions you have to make, time your stop, let the market go to see if it's going to continue to go down, or take your profit. You're pretty much done for the day almost. And if you would have timed your stops, then you would have got rewarded for the continuation.
Do you think it would be all right if I took the 3-ball or the whatever it's called, the catcher or snatcher, off of the 1 minute? And then just, well, maybe like Len said, maybe I should just trade off the 5, because when the 3-ball on the 1 minute shows up, I think, oh, maybe I should get out of this trade.
No,
And
no.
then it
again,
changes, it keeps going
again,
down.
the snatcher is not to be traded by itself.
Okay.
I know psychology wise, you're looking at 3-1, like, oh, this trend is coming to an end. What should I do?
Right.
There are 2 things you can do. You can tighten your stop, right?
Mhm.
So you at least bag some pips if you're wrong, or you wait for, like Santiago said, opposite signals to sync up with the 3-ball, right? So if you're going short, then if the signals all turn blue at the bottom, you're getting out of the trade at that point. So either one of the 2, you need to protect your account. That's the main thing. Okay.
Right.
Getting out early is only going to cause you regret later. Is that something you want to do? Again, that's psychology, right? Some
Mhm.
people are satisfied with the pips they make and they walk away. Some people want to say, no, I've left 100 pips on the table, but I could have made, I made 20 and I could have made 100, right? It's all, again, it's individual thinking. I'm just saying the 3-ball by itself is not a trading signal.
Okay.
Correct. You see, like the 3-ball right here, right? This
Mhm.
3-ball was probably over here, right? But
Mhm.
the 15-minute, 30-minute, everything was still in sync to go short. The only thing was out of sync is the 5, right? Now
Right.
you compare this to this 3-ball, 30-minute, 15, and now the 5 and 6 telling you to get out. You're out of that market at least,
Okay.
right? If you're
Mhm.
looking at the 1 minute. And look over here at the 5-minute. What do you have? You have the 15 and 30-minute out of sync with the 1 hour and 4 hour. We know the 4 hour, 1 hour is telling us to go short, but you know, if you're looking at the 1 minute, we're out of sync with this 3-ball. You should be trying to get out of this market. If
Okay.
it's going to continue to go down, everything will get back in sync, and you'll get another trade. So we're out of sync here. We just following the 1 hour and the 4 hour, adjusting our stops now, right?
Mhm.
Uh, to protect, right?
Okay.
Now you have 23, 22 pips and 32 pips protected to the downside, right?
Mhm.
You could adhere to get out. Look, you're at the Asian low again. That's good profit target,
Right.
right?
Mhm.
You should be waiting for the next signal. We're just showing you how the market is continuing to trend, you know. But is you have to be open to the fact that we getting to a point where the market's going to stop moving and try to set up for the next move. If you see the 1 hour is finishing up as 2 retracement. So what did we say? Is it going to get to a 2 retracement and go back up, or is it going to break this low and continue to trend down? This 12 will change color.
Can I make a suggestion?
Go ahead.
For just for those individuals, to kind of give you, I'm more or less think like I need a hard press answer. I need a yes or no. So if you're looking at the 5-minute and you're looking for possible take profit areas, depending on where you got in, you can mark the Asian high, the Asian low, or if you move your 5-minute back a little bit, Santiago, so you can see where
I
you
mean,
had a
time
three
wise.
ball, where you had a 3-ball at the bottom, where at the beginning of the Asian session or before the Asian session.
It's on the 1 hour, the 3-ball on the 1 hour.
Yeah, the 3-ball on the 1 hour. You can use those 3 locations as possible exits. So, because that's what everybody says you want to try when you get in the trade. You should already know where your take profit is when you get into it. So, if you look at, you could possibly take the Asian high, the Asian low, or the 3-ball at the bottom. Now, you can let the market dictate where it's going, but because of the momentum, but mentally, those should be your 3 stops, areas where you can take profit. Now, I can blow through those and keep going, but if you want to just look at high probability trading and taking your profits off the table when you're winning and not losing, I would say those 3 areas could be areas where you should think about
Correct.
taking.
Correct. Yeah. You have to use that to your discretion and what you can tolerate.
Right.
I can tolerate more because I'm more comfortable with the market moving in a specific direction that I just how I protect my profit is just tying my stops, tying my stops, tying my stop, tying my stops. If it wants to come back and take it, I know I'm already in good profit. It could do whatever it wants to do, you know, like that. I don't limit myself a to a target, but also open myself for the market to continue moving. If I see it hit a target and the market is completely shifting, I'm out of it. But if I see potential, I'm tightening my stops, tying it up. Every swing on your 1 minute for me is a tighten stop, tight, tight. Keep going down, tighten it up here until it decides to come and get me. You have to figure out what's your tolerance, right? And what's your pit profit? I mean, target for the day. You could have been done up here. You may say, I'm done for the day, regardless of what the market does. As soon as it hit here, you have to make that decision. Do I get out or do I tighten my stop for a potential move? You know, It's all on the comfort level of what you have. You know, as you get better at it, then you start loosening it up and you start going for more pips because you feel more comfortable with it. You know, it's all on your comfort level.
Yeah,
But yeah,
and
yeah, that's
experience.
that is a good idea. That is a good idea to start off, make your targets. You know exactly what you're going for.
Yeah, I
But
like that.
don't get upset if it continues to go further. You have to be satisfied with what you get, and then move on to the next trade, next setup. We get
Yeah,
we get in
we
trouble
all
when we
let
start
that.
getting greedy.
Yeah, that's what I was just going to say. We all let that greed factor kick in, but yeah, we have to. That's why you should have a trade plan. And I think I think that's I'm at that point where I do have some sort of I guess you would say a hard press number I'm looking for. That's why I hear
Correct.
a lot of people say I got my 30 pips for the day. Even there's one guy I look at named Stacy Burke. He does 50 a day, but he's an advanced guy. But even he goes for just 50. He's been trading for years. So you got to have a hard press number and don't let the greed factor get in. I know we look at other people's success, like Santiago had over 200 and some pips. Well, we want that. Well, but you also see that he's an advanced trader. So you have to take all that into consideration. So when you become an advanced trader, you can go for those big pips. But until you get to that point, why not take the profits off the table? Why give money back when you're already up? I mean,
Right. Maybe you go for 10
So
pips and you're comfortable
No,
with that,
no,
and then go
okay.
15 pips. And
It all boils down to a trading plan. I think Len said that. So
I think that's good.
if you have a life goal of achieving certain amount of money per month, how do you build to that? That's the plan you have to make. And at that point, you have to work the plan, right?
Mhm.
Because if you don't work the plan, if you break your own rules, then why would you have success?
Yeah. I'm sorry. Let me get back to this real quick. You see that the market has stalled here. You bring down and you protect your profit, right? Everything is strong on the 4 hour. Everything, you're looking for the low of the day for the 4 hours to start changing. The 1 hour, 30-minute, 15-minute are all blue. So the market is still moving down. So you're protecting your profit, right? But look what happens at this juncture. I got it moving too fast. Go back to the 1 minute. We have broken the previous low. And the H12, H4, and D2 are in sync. So you're definitely just looking for short trades at this time. And the low of the day has been broken.
Yeah, my
So this
my
what
personal thing, my focus has shifted to the 1 hour following the D2 at this point. So everything's in sync. You see how I shifted from the
now,
1 minute to the 5 minute to the 1 hour? That's really how I'm shifting my time frames to see where I'm following that trade. I hope that makes sense.
Yeah. But I think also, like Len said, that what you're doing is advanced.
I understand. I'm just explaining my thought process.
Right.
Now,
I think it's great.
I'm the one that's saying 30 pips a day, because that really is my overall goal. If I make 30 pips a day, 600 pips, if I trade one lot, I'm at 6,000, I'm happy. And that's the plan I have in the background. And I think Santiago and myself and John came up with this plan when we were trading together. But we don't have to be limited to the plan. I'm just saying if you do a minimum of 30 pips a day, we are good to go, right? As long as we do that, there will be days that we make 20, other days we'll make 60. But the average should work out to 30 pips a day.
Right.
That's the plan. Anyway, go ahead, Santiago.
okay. So now we're in the New York session. We're coming into the New York session looking for a low. We're coming hot into the New York session. The 1 hour has saddled. So that's telling me that the beginning of the New York session, this is going to be the high of the New York session, and we expect a continuation to go short for the low of the set of the New York session. And everything's confirming that it wants to continue to go short. So at this point, I am lowering my stop, protecting all the pips that I've had going into New York session. As you can see, the market never came back. Every time you lower the stop, it had structure, and the market continued going in the other direction. The market never came back to touch it.
The good thing about this system is it follows market structure. I think in the past, people have been skittish about tight stops. You know, I mean, they've been asked to do tight stops, but it's been set randomly at 5 pips, 10 pips, and they keep getting taken out. And that's because
Correct.
you're not trading the market structure at that point. You're just trading because somebody told you to put a stop at 10 pips and not understanding why.
Correct.
The way we are explaining
at-
the system is to explain why or how to get to that and feel comfortable about it. Go ahead, Satya. Sorry.
Correct. Yeah, the system is set up to help catch the highs and lows of each session, which and the highs and low of the day, which is your market structure. You can put any time, you can put a 1 hour chart and fill up the chart with wedges, triangles, channels. Put the line there, and every point will be the high and low of the day. Every point that it turns around on with the structure, like if I put a line right here, all these points are the high of the day for that day. So in essence, you are trading the structure, just by trading off the highs and lows of the day. You are creating the structure while somebody else is waiting to hit this line again. You're already trading here, you're already trading here, you're already trading here. And somebody else is waiting for the market to hit again here or to create this structure. So you are trading along, creating a structure by acknowledging that you're at a high of the day, low of the day, low of the day, high and low of this day. And this created this whole structure of this line going down. Well, some people don't even trade until they see confirmation that it hit 1, 2, 3. Now they may trade it down to here and then trade it up to here and then trade it back down to here. You up here trading this, you can trade that, you can trade this, and you can trade that, and you can trade this. All highs and lows of the day. So in essence, you are, I don't like to say that, but you are the market maker now, making the structure. Without having experience on, how structure is created and all the market manipulation with the banks and market makers. And that was the whole concept, is to be able to catch those points and be able to trade off those points at a higher rate. So these are the points that you're trading. If you really want to take a look at what you're trading, all the highs and lows, all that creates all kinds of structures through the market. Does it make sense?
Yeah,
guys?
that's good. Mhm.
So don't be scared or deterred. This is what you're actually doing, in essence. And that's the whole concept, is to be able to trade that at a high rate. I don't have to wait for the market to hit down here again to trade it.
Right.
I know when I get a low of the day, I'm start trading in the opposite direction. I don't need to mark up my chart because I'm trading off the highs and lows anyway. Those are gonna be my markup of my charts, regardless of what pattern you're trading. So it almost came in and took my profit, right? We are changed back here. So there's gonna be the momentum is still strong on the 4-hour down, but we're starting to get sideways movement and potential, move back up because the 1 hour may have found the low of the session. We thought we had the high of the session, but it's changed color. So now this move down could be the low of the session. Remember, you always have to open up to the possibility of either or depending on what's going on with the filters. So you have the ability to react when the market does go in your direction. So my 1 hour, 30 minute, and 15 minutes are in sync, right? And this could be a possible low of the day. I mean, low of the day and low of the session. So that's where I start looking at the 1 minute for everything to get in sync to go long. Because I'm trading the 1 hour momentum. And I have to wait for everything to get back in sync to go short. So where is it?
It's been 2 hours. You guys want to take a break?
Well, actually, hey, I'm gonna have to cut it short because I thought we was getting started a little earlier, and I
Okay.
have somewhere to be at 11.
So another hour.
But you know, I have to leave now to be somewhere at 11. So I
Oh.
need to start leaving in about 15 minutes.
All right, so let's ask the group.
But this
Let's go into a question and answer session. Let's ask the group, open the session up to the group if you have any questions.
how do I do that?
No, they have the mics, they can ask any
Oh, okay.
questions.
I feel like I have plenty to review. Thank you very much, guys.
Okay,
Yeah, I've got a ton of notes here. I've got some studying to do. I think my time would probably be better spent with that and collecting my thoughts
okay.
on this.
Santiago, I have a question.
Go ahead.
I noticed that at some charts, you have been using stochastic. This is at experimental phase, or you are using somehow the 63 and 2 stochastic.
I was using the 63 and a 5-3, the 63 and 2 and a 5-3 and 2, but I've minimized that and I'm not using that no more because I'm finding it easier to trade this way without having the 63 and 2. So I'm easy to transition from using the 63 and 2 to just using this.
Okay.
So as you see the charts I'm posting now, I don't have the 63 and 2.
Yes.
And if you see them up there, I'm not using it as I used to use it.
Okay.
I'm seeing the same thing down here as I would, and in the chart as I would 63 and 2. So it's pretty much a double confirmation at that point, where the trend is and where the swings are. But I could only take those swings if I have the momentum and everything in sync in that direction anyway. So to answer your question, I transitioned off of that 60 and 5, 3 and 2. That's why you don't see it anymore on the charts.
Okay.
Previous charts you saw there, but I don't use it as I used to. Yeah, I used to have more moving averages. I don't use the moving averages anymore. I transition off of that because it's giving me too much delay reaction, and it was influencing my decisions. So I just didn't do it. I was just straight off price action and sync up. with the
Market
highs and
structure
lows of the day.
and price and
That's all.
price action.
Yeah, and that's all I realized was all I needed He's correct.